Thank you. You're going to all have to bear with me for another 40 odd minutes, but really looking forward to this conversation. And we're going to try and zoom out a little, not just focus on finances, but look at how climate impacts each and every sector of our economy. So industry, infra, agriculture. We'll try and touch upon each of those aspects. And if I may, gentlemen, I'd like to begin with the lady on the panel. Shilpa, thank you for taking out the time. It's a difficult time for you. I know you're still dealing with a lot of things at home, but let's start with MSMEs, yeah? Do you think that's a good note to start this conversation? We see many good ideas to help MSMEs deal with climate risks, but most stay small pilots. What do you think stops them from scaling, and how can institutions like BII help them grow?
Thanks, Christine, and it's great to be here, even though virtually. I think MSMEs, it goes without saying, are really the backbone of our economy. And to me, what's interesting is there's so much good innovation in India, which really tries to redefine accessibility, affordability of solutions for MSMEs. And it's really interesting to see how these can be scaled. The trouble is what we think of as the missing middle, the missing gap in terms of funding, which can really take ideas and take them to scale. And that missing middle, if you ask me, Christine, it's really because of a number of factors, but most definitely a lack of risk appetite driven by the fact that a lot of MSMEs are in the informal sector. There's not that much information. Layer it with the fact that solutions are new, you don't have adequate data on how the solutions are working, and therefore there's little risk appetite to provide funding at scale. And therefore, I think the role that organizations like ours, which is BII, the UK government's developmental capital arm, the role that we can play is really, first of all, by de-risking capital flows. I mean, that's the most important function. Find what are the gaps that, if filled, can unlock very large-scale funding. And along with that, I think the other things DFIs do very well is build in technical assistance, which can help with standardization, developing resilience metrics, developing reporting frameworks, which can really then give data at scale and develop comfort amongst the larger capital pools. The last thing I'll say is really, just bringing many stakeholders together. When you're trying to handle something like, climate, it needs very many different kinds of stakeholders to come together. And when I think back at, like, for example, the work we've done in the electric mobility space, where we funded very many things all the way from equity capital for early startups to guarantees, to debt, to MES. So, there's various things that can come in and then, anchor mobilization of capital that has been on the sidelines. Let me pause here, and I'd love to hear what the others have to say.
Okay, so we'll come back to you with a follow-up. Mr. Rastogi, speaking of lending, we've seen SIDBI pay a lot of attention to climate risks, not just in MSME lending overall. What are the most important changes you've made so we can pick on that story and take this conversation forward? And what more needs to be done, because climate risk is not going anywhere. It's here to stay, possibly only going to get more intense.
Yeah. So thanks, Christine. I think at SIDBI, we realized that this is a very important area where we need to intervene. We need to start doing something. So maybe very early 2010s, we realized, and we started a department itself where we said that it is a green climate finance. And we started looking at how to channelize resources which are available globally, which are available through government, where we can make schemes make use of those funds and reach out to MSMEs. But the problems were aplenty. Problems were aplenty in the sense, number one, the mindset of the MSMEs to move towards this manufacturing, green manufacturing, because for them it was very capital intensive. And capital for an MSME is a very rare commodity, or I'd say difficult commodity to get. Number two was how to change the mindset of bankers, because the perceived risks were very high. And the bankers were finding it, very difficult how to finance such things. So there, it was very important for us to look at finding solutions. So one of the solutions in terms of when we come on the demand side, that the solutions would have come through subsidies, through interest subventions. For the bankers, it was important how to take care of the risks. So SIDBI started collaborating with various agencies and getting into guarantee funds, guaranteeing the loans, so that the banker is assured that the money is guaranteed, the risk is much lesser. And that is where I think we made a substantial impact on the green ecosystem. As of now, if I am not wrong, I don't recollect, I'm not very good with the numbers, but we've done substantial work with all the international multilateral agencies in the green ecospace. So I'll also pause right now and maybe.
I'm sure Mr. Raman also wants to add his 2 bits to this, because he's not alien to this story. He's been pretty much a part of the story. So you can add your 2 bits, Mr. Raman, and then we must talk about how this problem or climate risk is not directly just impacting industries. It's impacting jobs, income, but naturally savings. So in the face of these kind of climate risks, how has PFRDA's role changed in terms of retirement security? Too many questions, but...
No, but very good afternoon to all of you, and thank you for having me here. Just a small point on the credit landscape, and there are greater veterans over here who can even answer that better. But I think what's critical in the credit space is that how do you incentivize that relatively small business to take that leap of faith and put his money into something which is expensive, but he has visibility of the savings that he's making. So, the tool that got developed at SIDBI was really about giving him that visibility, saying, if you do invest X, it's going to cost you, the money is not all that cheap, but I can actually show you your, the savings and the cash flow from the savings is now going to sort of take care of that percentage of your EMI. And that break-even period for the MSME is a very critical one. So, you have to get very granular when you come to, the smaller entities and show them with some level of exactitude that where is it going to come out. But I think the larger picture, as Satyaki very correctly pointed out, is that can the organizations come together with multiple cushions? So an FLDG program has worked brilliantly. And we have philanthropic money coming in, whether it's a Shell or whether it's somebody else. I remember we have an FLDG of something like 2 to 3%. We have the SIDBI, CGT MSC and the NCGTC coming in, and then you invite a World Bank or somebody else on top of that. So, that's the way of, sort of spreading and diversifying the risk, and that's really critical. But getting back to the point of, how this entire climate risk is going to impact you and me as citizens, I think household savings as a group is really what we're concerned for. And at PFRD, I think the role is really to try and get the NPS accounts moving. It's about covering not just 9 crore people that are currently there within the ambit, but making that 9 crore into 40 or 50 crore. Because every Indian needs a pension account, needs something called future long-term savings. And all these phrases of saving, long-term, safe, reasonable return, all this, puts it into an equation which is very difficult to solve. So how are we going to ensure that there's adequate return? We do not want to get into projects or into commercial paper or corporate bonds where we perceive that there is a risk, but frankly, there's nobody to tell our pension funds what is the level of climate risk. So we still have not reached that level of granularity, which again I think is very important, to be able to say that, like you have a double A instrument which has been, brought out by gatekeepers called credit rating agencies, can we not have something similar where the climate risk is also reduced to that number, which then gets infused into that rating system? We're asking for a lot, but that's how the large, long only funds operate across the world. You have to have, strict, prescriptive guidelines which the regulator brings out saying you need to invest only in these kind of instruments. And therefore, I still have not found that readily as an answer, either in India or abroad. But, I'd be happy to sort of hear other people on that.
I don't think we have a choice than ask a lot. So either we act, we need to definitely keep asking. Mr. Ajay Seth, Chairman IRDA, is also with us. So I'll quickly use this opportunity to come to you, Mr. Seth, since we're speaking of insurance and we're speaking of protection. The unfortunate part is also that despite these huge climate risks, not just people, businesses are also not insured, and that pattern keeps repeating itself year in and out. How important is insurance? So let's go back to the drawing board. How important is it really to protect India's economy, and where are we left exposed the most?
First of all, thank you very much for the organizers and the forum to having me in this session and sharing my thought process with all of you and learning from others. The session's topic, and before talking about insurance, what insurance can do, how do I see this entire piece of climate impact and hazards affecting Indian economy? And there are 4 areas this session has identified: agriculture, industry, cities, and infrastructure. Where I see that even before insurance, which comes as a risk management, before comes the stage of risk mitigation. And there the governments have a very significant role to play. Say in case of agriculture, now climate change is with us, and climate resistant or the climate sturdy seeds, agriculture practices which can take care of adverse change in the climate, as well as a much more rigorous and a concerted efforts for watershed development, which is per drop, more crop, which Honorable Prime Minister have been championing. That kind of a measures for agriculture are needed to make agriculture more resilient. At the same time, enough storage using the cooperatives and other means so that once a crop is harvested, that at that stage post-harvest losses can be minimized. So that's one first mitigation measure. Then when it comes to the industries, and I'll focus on MSMEs, and that is a more vulnerable section. Two aspects. One, much better fire protection or fire mitigation activities. Otherwise, a number of losses are coming because of the fire accidents happening and the way the practices are. The second piece is the kind of a fuel which gets used. It is not that the unclean fuel adding to a climate change problem. We are talking about a more medium term, that how do we make industries more safer, shifting from unclean fuel to clean and safer fuel. There's again a Government of India scheme. DPIT has that scheme, Ministry of MSME and Power Ministry has that scheme to do a sector specific and working through associations to shift them, transition them to a more cleaner and a safer fuel. I'll talk about the industries. A lot more has to get into the design code, that how our infrastructure is a lot more climate risk resistant or the mitigation efforts happen. Now coming to the risk management now. Agriculture insurance scheme. Now there's a lot of scope for improvement. Lot of grounds have been done, lot of reforms have happened there, but a very clear shift from a crop cutting experiment moving towards a weather based, and where some risk is borne by the state governments, cup and cap model, and popularizing that scheme can make a sea change in terms of agriculture community. Similar manner, making insurance products both against fire and basically about fire for MSMEs. That is where the insurance sector comes in a very, very significant manner, and that has to be part of a larger effort. How do we make insurance affordable for all, especially with those economic entities which have a lower income or which have a limited income or limited surplus? I'll stop it here.
But the one question, again, a question that we repeatedly ask ourselves year in and out, Mr. Seth, is why is insurance, climate insurance, a thing we remember only after disasters unfold? What more needs to be done that that story changes, that it is given as much importance, possibly easier access? Where do you think the problem lies?
See, two aspects. When again I'll go back to the first aspect which I mentioned it about the mitigation measure. Just recall, 20 years back, entire east coast of India used to be cyclone, a big hazard, big natural calamity, lot of deaths happening, lot of damages happening, but successively, Government of India and the state governments have invested in building infrastructure, building better awareness, any cyclone, a better prediction also gets announced, people are warned, they just move 20, 30 kilometers to safe houses, same safe places, and the damages are minimal. So that is what a good mitigation strategy can do. Similar manner, like the fire accidents which happen. Now we see it in urban areas, the way MSMEs work, and again, in terms of the regulation around the fire practices or the fire mitigation practices are rather poor. That is something which requires a lot more efforts to happen in our country.
Okay, you wonderfully summed it up. Now we'll have to unlayer it one by one and keep touching upon all of these sectors, where the areas of problem really are and how we need to address them. So we're going to go back to banking, Mr. Kumar, because that really lies at the core, at the heart of what more needs to be done. The story pretty much begins there. For the next 10 years, how do you think the Indian banking system should finance the green transition story in India? Are we on the right track? What more needs to be done? And we're looking at a picture over the next 10 years.
No, I think a lot more needs to be done. What is happening currently? One is it is a scattered effort, if you see. So when it is financing, for a bank, a project is a project. Whether it is green or it is a thermal, ultimately when appraise any project, they look at that whether when we finance, whether my money is going to come back or not. Similarly, suppose transport sector. So banks are doing a lot of EV financing, but that data, I'm not sure whether that is getting captured. So defining green for the banking system and codification, that needs to be done. All of us are sort of talking in air that how much money we need, how much we have financed. But today there is no reliable data being captured about what is green and how much finance is flowing to the green. Broadly, we know that yes, we have financed so many solar plants, you know it easily. But there may be many activities which are having an impact on climate and banks are financing, and that is not getting captured. So that codification, even today, Reserve Bank, they ask for data. There is something called BSR return. But I doubt whether that return, it throws any light on what banks are doing. So it is important that green taxonomy is fixed, data is codified, and reporting is done. Only then you would be able to have an idea and have a plan. But if you ask me, we were talking about the costs. So even if somebody guarantees, and that is what Mr. Seth was making a very interesting point, per se, it does not reduce the risk or the cost to the end consumer. It is just that if it is not a guaranteed loan, bank will finance at 9%. If it is a guaranteed loan, their insurance premium of 2%. So bank will be 7%. But as a consumer, what benefit I am driving? I am not driving any benefit. So merely availability of guarantee or insurance does not reduce the cost to the end consumer. And that is where the real issue is. Again, I will take just a small example. Today, why don't people buy car? EV means. Because the cost is 30% higher and nobody sees it that the consumption cost, the fuel cost which they pay every week. When you buy an electric car, you are capitalizing the entire cost for 5 years. And that's why cost looks higher. But does a consumer look at that way? They don't look at that.
But
To the-
with EVs comes the EV infrastructure
Yes,
story
infrastructure
also. I mean, I
comes.
think
So
that
for
also
bank,
plays. Yeah.
any economic activity which is in banking parlance we call commercially viable. If it is a charging infrastructure, the revenue which they generate by providing that service, if it is viable, bank will do it. And just now I met a gentleman who says that he went to many banks, but ultimately State Bank of India is a startup. They are putting a charging infrastructure, Statica, and was very happy to learn that State Bank has partnered with him. So it is not that the bank finance is not available. I have always maintained that bank finance is available, but bank, when giving finance, they are looking at how it will be paid. And if the cost is too high for the, whether it is industry or a consumer, then there is a risk of default or non-pay. But we must have, like as RBI, they say directed lending. So even for renewable, and we talked about that priority sector classification. But directed lending, banks are very familiar where 40% they have to give to priority sector. So any such effort, if it is made, then I think banks can do more. But you have to also realize that the requirement of the funding is in trillions of dollars, 10 year. Banking system, the balance sheet size today is $2 trillion. If you take incremental credit, 10% growth, we are looking at 20 billion. And out of that 20 million, how much can we spare for the green projects? So international capital, channelizing international capital will be very crucial. Banking system alone does not have that capability, then they can scale up financing in a very significant manner.
Which brings us to the role that global investors play. And Shilpa, I want to quickly come to you on that note. Global investors, they to an extent also want stability and clarity. And that goes for anybody who's putting their money, right, before they invest. What would make India a more attractive destination for long-term capital? And I want to narrow it down to, let's say, MSMEs for now. What do you think should be done?
Yeah. See, it's an interesting question because there is so much capital which is looking to be deployed profitably. And the question is, how do we match this, this capital with the opportunity on the ground, especially with MSMEs? And I go back to the point that, yeah, first of all, it's addressing the risk. It is true that MSMEs, a lot of commercial capital would think of that as a risky investment, like I said, because of lack of data, lack of credit history, etc. And therefore, developmental capital, which is separate from global commercial capital, can come in to give that first loss kind of guarantee, develop a credit history, develop a track record that can encourage others to come in. And we've tried that very actively. In the last 1 year, we've actually announced 2 programs, both of which on the back of our capital were going to draw in pension capital, were going to draw in other forms of commercial capital globally for deployment in developing countries, of which India would be a large part. But the other thing I find really interesting is even banks are looking for new opportunities to deploy profitably and at scale. And one of the things we're doing in India is working with a fairly large bank to look at a program because they were looking at women business owners, micro women business owners, and they wanted to support them. But these were people who were just graduating out of self-help groups, and the bank was not confident of scaling this program. And therefore, with the DFI capital, they were looking to do a first kind of pilot, which also would be a fairly large-scale pilot that can be scaled up once they understood and got familiar and comfortable with the credit history of these MSMEs. So I feel more than anything else, it's the ability of DFIs to crowd in other kinds of capital, both domestic and global, which helps these pools of capital diversify into newer markets that they were not going before. And therefore, together with this private capital, what happens is it becomes a really strong statement on market signaling. It signals to the market that MSMEs, even for things like climate, or even sometimes, gender driven, are areas that people can diversify into with good credit results. Let me pause there and
Okay. Okay. Uh, and really, Mr. Rastogi, one thing which is known as it's an established fact by now is that lenders obviously are hesitant given there's not enough data. Returns are a concern. Those areas have been a concern, looks like they're going to be a concern in years to come as well. What needs to change so banks can confidently lend for resilience? It's a really broad question, and I know it isn't as simple to answer this, but if we were to really try and decode this, is there a way forward?
So on the issue of data, I think are changing. So it's not that today it's as hazy as it used to be. Substantial data is available, which is reliable, comes from the sources. So bankers will find more confidence in doing that going forward. So that is one of the things. The second thing is for any financial institution, especially a DFI, but I'm talking about even banks. It's high time that we start or we continue to innovate. We continue to find ways how to do it, and we continue to take challenges as to what has not been successful as yet. So I'll just take the example of like within the green finance system, being ecosystem technologies, there's mitigation and adaptation. Now, mitigation technologies, energy efficiency, renewable energy, I think everybody is doing, and everybody has started becoming a little bit more comfortable with that. But what happens in adaptation, it's more of where you will see the CSR money or the philanthropic capital or government money coming, because these are largely more social sector projects. This is how it is being funded now. But if I, just to give an analogy, go back 3 decades or go back 4 decades, we used to think roads construction is also a social sector, is also what it's a responsibility of the government. If the government wants, it will develop. We never thought that this will create revenues in future and this could become a self-sustainable or bankable project. Today, we know that most of the roads in the country are being constructed based on cash flows. Bankers are financing it. So it's the challenge, it's the innovation that has been done in that space. I think we need to continue on that. We need to find avenues how to do it going forward. We have also similarly taken up a challenge. I'll just give a small example. Very little time is left, so I'll not take too much of time. We've taken, like in the adaptation technology, today we have taken a challenge that in the next 5 years, we will pump in through the financial ecosystem $1.6 billion. Now that's a challenge. Today, we don't see the end of the tunnel, but what we have decided that we will dig this tunnel and see that we see an end to the tunnel.
I want to revisit the story which was shared by Mr. Seth a while ago, the question that I posed to him on how realization kicks in after things go wrong, after a disaster has unfolded, and somehow that doesn't seem to be changing. But Mr. Raman, if I could just ask you how people's money can be protected, their savings can be protected, and my pointed question is that one step that India can take or should take to protect long-term financial security of the workers who are most affected by climate risks.
So it is a very important and central question that these long-term savings, whether they be under pension funds, insurance funds, but we're talking about money over 25 years, 45 years, that's the kind of time period. We need to ensure and just maintain the trust of the people of the country that their money is going to be safe over a long period of time. Somebody enters the system at one point, exits at another point, but this is a continuous flow. We are a growing economy, and the demography also is currently in our favor. Therefore, we need to ensure that this capital gets directed towards the important projects that are needed. Infrastructure is one of the most critical sectors. I think our pension funds are already in about 37 subsectors of the infrastructure definition. Now, we are obviously looking at doing more and more within the infrastructure sector as an important investment destination. We therefore need a few assistance points in this journey. One, of course, is the ability for institutions to come in and provide the credit enhancement, because infrastructure bonds typically will never be rated at what is needed, typically a AA, and they would be lower than that, and therefore we need to work closely with other institutions, a variety of other forms of capital, so that we bring in the products which can enhance the credit. It is absolutely critical for all these long-term funds to religiously adhere to the guidelines that are brought out for investment. Of course, these guidelines will keep changing over a period of time, but I think that's the way the market has its discipline, and that's how funds are continuously invested. We also therefore need assistance for the capability which probably today in India lies more in the banking sector, less with funds like ours, but we need to build that capability within our own system so that the detection of climate risk starts becoming as normal as one would talk about detection of credit risk. How we are going to do this, I think it's not unknown, but I think it's about putting in the desired investment in time, in resources, the right people, and creating this. There are even discussions about how within a banking consortium which looks at an infrastructure project, can the pension funds or insurance funds also join in at that stage? So we are right now, we've opened up the pension funds to what is known as the AIF industry, but can they even come in directly into a project? That's the kind of returns you would like, but obviously you need to ensure that the safety of the money is paramount. So, there is no easy answer for this. I think we have to, as they say, feel the pebbles as you cross the river, and that's really how it's going to be. But I think there's a lot of international expertise that has already got built up. And I think that's an important place where we should be able to reach out and maybe, get a better, quicker sharing so that we sort of jump into this without too much of a learning curve.
Somehow, and on expected lines, the needles keep moving back to the banking system. So I'm going to have to ask you this, Mr. Kumar. Climate risks are only growing, and banks continue to wane on traditional methods to assess loans. What changes you think are needed in how banks evaluate and, more importantly, manage these risks?
No, the banks now went to the appraisal, and it is driven by regulators also that for any project they have to do a climate risk assessment. But the problem is bigger. Again, suppose I'm taking an international example. Hong Kong, now if it is all surrounded or an island, surrounded by water, and if water level is rising, that doesn't mean that banks taking into that account is stop mortgage lending. Can they do that? They can't do that. So climate risk for large projects, easier to assess. When it comes to retail finance, there are also climate risks. We know it. And flooding is the best example, that excessive rains and the flooding, or there are stories, I hope they don't come true, but every time you read that level of sea is rising and many cities will be, go under the water. But for a bank, it is very difficult that it stops lending in those places, But the awareness is there, and internationally, all regulators, they have made it mandatory for the banks to have a climate risk appetite framework. So it's not that that framework is not there. In India, it is still evolving, but many jurisdictions, it has evolved quite.
That wonderfully sums up the Indian story and where we're at. I've run out of time, but Shilpa, very quickly, because I began with you, I want to ask you if there was one change, and I don't have more than 30 seconds for this, one change to scale climate resilient financing for MSMEs otherwise in India, what is that?
Yeah, and I think I'm going to echo something that everyone said earlier, which is, I think really, if you think about it, it takes a village to raise a child. And likewise, to address climate, I think it takes the whole country. And can we establish a national resilience finance platform for MSMEs? Something that brings together various DFIs, Indian institutions, domestic banks, all kinds of capital to deploy different needed money into the system to really change the climate goal.
Okay, wonderful. So, where does the buck stop? We're going to have to wait and watch, but definitely now is the time. Now is the time to act, and we're all looking at that. Is why we're having these important conversations. Shilpa, thank you, gentlemen, for
Thank you.
joining me in, and thank you, audience, for being so patient and lovely. Thank you.